Market Strategist with TD Ameritrade, JJ Kinahan joins us. JJ, welcome to Big 550 KTRS.
Thanks for having me, McGraw. How are you today?
What happened?
What happened was incredible volatility in a short amount of time. It's really the best way to describe it. We all thought there might be a sell-off of 5 to 10%. I just don't think any of us thought it would happen in basically 3 days.
Why was it? What was it about that jobs report that put the market into a tailspin, or did that jobs report have nothing to do with it?
Well, you might want to say that the jobs report was maybe the match, but there was a lot of kindling around it. And what it is there's a fear of interest rates going higher, which we all want. It means that the economy is in better shape, but the fact is the Fed's job is to control inflation, and the fear would be that they would have to raise rates really quickly a bunch of times in a row. And it's not only that. There were other things going on. The market was due for a sell-off. There was some big trading firms that got no problem with some leveraged products. So I don't think there's any one thing you can point to, but that jobs report, as I said, might have been the match that helped light all these other things that were laying around.
JJ, going forward, we've got massive tax cuts flooding the markets with huge amounts of money. We now have a huge spending bill coming out of Washington, huge amounts of money being spent. Interest rates and or inflation, that's going to be, right? I mean, that's coming down to the pike here, isn't it?
It is, and again, where we were at on interest rates is not something that you can sustain forever. You wanted to see rates a little higher, as I said, because the economy is improving. We have more people at work, as you referenced. Wage growth starting to go up a little bit, and a lot of money in the market because of, again, companies having more money to spend. And we'll see today when the president talks about his infrastructure bill, which I think many people are excited about because it creates a lot of opportunity for many of these firms. In pre-market trading today, in fact, the Dow was up over 300 points. So there is a lot of excitement about what's going to come out. I would say the one thing for your listeners to keep in mind is that these don't tend to be really quick events. Volatility events usually take 3 to 4 weeks to work their way through the system. So I would expect another few weeks of this type of volatility.
Can you explain to me why I keep hearing about the VIX index and what that is and why it's driving me crazy?
Well, I'm sorry it's driving you crazy. The VIX index, it's the measure of volatility in the market. What does that mean for most people? Really simple way to think about it is volatility usually equals fear. So if we go up, most of us are pretty happy. Our 401ks are growing. Our investments are growing. Most people need the market to go up. So the VIX goes down because people don't have as much fear. Nobody's going, oh, my God, my 401k is going up too quickly. I can't possibly stand it. However, on the other side of the equation, when we start to go down and go down quickly, as we did last week, fear grows, volatility grows. What it means is people are willing to pay more for protection for their portfolios in a very simple way through options. So it just measures the fear that's in the market right now. VIX higher, market down. VIX lower, market up. And a really simple way to think about it.
We don't have any time, but you can actually buy the VIX index. Is that right? You can buy?
Yes, you can. Sir.
Wow. JJ Kinahan, Chief Market Strategist with TD Ameritrade. JJ, thanks for checking in.